Hello and welcome to Business Incorporated. I'm Ladi Williams. Coming up on the show today. IMF asks Ghana to balance developmental spending and debt accumulation. South African regulator recommends lifting Johnson & Johnson vaccine ban. And Guinea receives purchase of 300,000 Sinovac COVID-19 vaccines. We'll begin this week's show with intraday market numbers from the African continent. The GSE in South Africa began trading negative by 0.38%, while the main index in Nigeria closed positive on Friday. Elsewhere in the region, the EGX30 in Egypt surged 0.64%, while Kenya ended Friday's session positive. And was a similar picture in the Middle East, where investor sentiments were mixed at intraday. And the UAE, the Abu Dhabi index declined 0.36%, while Dubai index lost 0.14%. On the flip side, the Qatari index surged 1.48%, while Saudi Arabia's market added 0.21%. In European stocks, it's mostly higher this morning, mirroring trading in global markets. Let's talk to Ashutosh Pandey now for more. Great to have you, Ashutosh. Let's talk about the officials from EU and US intensifying negotiations on a new pact for transatlantic data transfers, trying to solve the messy issue of personal information that is transferred between the two regions. What more do you know about this?
Well, thanks for having me. Yes, the negotiations are ongoing. We got a statement on in March itself that there were these negotiations were going at a good pace, and they are trying to reach an agreement that would allow them to legally allow companies to legally transfer personal data between the US and Europe. Now remember, there is a privacy shield, as it was called. Now that privacy shield was struck down in July 2020 by the European Court of Justice after an Austrian privacy advocate and activist, Max Schrems, said that it did not really protect the Europeans against US mass surveillance. And this was his main concern, and the European Court did agree and they struck it down. However, they did not struck down the idea of transferring data between both the sides. And that's the reason why now, since August last year, the two sides have been working on an enhanced privacy shield that could come in play. So far, we don't know what are the negotiations about going to cover and what are the bone of contention in this. But the good thing is that both sides are confident of reaching a deal, and both feel that it is important during these times when the recovery would from the pandemic would require both sides to exchange personal data. Companies from both sides could benefit, and even individuals from both sides could benefit because of an enhanced privacy shield.
All right, looking at the business side of sports, 12 of Europe's top soccer clubs have announced the launch of a breakaway Super League. Money seems to be the biggest motivation here, isn't it? And what's been the reaction to this breakaway league so far?
Well, certainly money is a big factor here, because these companies do realize that they have the star power to attract more broadcasting money, and also fans would be eager to see the likes of Messi and Ronaldo's clash against each other more often, and that's their motivation, and they say that whatever they're doing is for the fans. But we've got to also remember that this comes in the backdrop of the pandemic, where they've actually suffered a lot of losses. There have been no match, the matches have been without spectators, so they've lost a lot of money, and that's the reason why they feel that this is an opportunity to recoup their losses. And to begin with, they are starting with a 3.5 billion euros fund to actually make up for the losses and also to care for infrastructure needs. So that's a big thing. Then the broadcasting rights that they are the broadcasting money that they are expecting is more than what the current tournament actually attracts. So these are some of the main motivation. The other is perhaps many of these companies are unable to make it to the Champions League every year. So, for example, there are 6 founding members in this of the Super League from the English Premier League, and now only 4 of them make it to the Champions League every year. So now this guarantees that the founding members would be able to play annually in a tournament that actually represents the biggest names and the most popular names of the sport.
That'll be interesting to watch. But let's shift focus now to cryptocurrencies. Bitcoin is again in the news after sliding as much as 15% on Sunday. What's behind that plunge?
To me, it seems that the investors may have gotten too far ahead of themselves after that IPO of Coinbase, the biggest crypto exchange in the US. Back then, there was a lot of euphoria about this IPO, and perhaps the investors thought that, okay, now it was established that Bitcoin and other cryptocurrencies are perhaps mainstream, and that's clearly not the case, as we can see that a currency that is as volatile as a Bitcoin can really not be mainstream. So 15% down on Sunday, a huge fall, and the currency still is very inefficient to make transactions. So those problems do remain, and that's the reason why we did see the kind of fall. But there is another reason that perhaps there were reports that the US regulators were looking into cracking down on money laundering, which is actually done via digital coins, and that was weighing on investors, that report. But even that is not surprising, because the more these cryptocurrencies become popular, the more they strive to become mainstream, there is going to be greater scrutiny on these digital coins.
Regulation is calling there. All right, Astos, thank you so much for the updates. Do enjoy the rest of your day. And for updates from London, let's cross over to Juliana now. Great to have you, Juliana. Let's talk about this legal action underway at the High Court as hospitality bosses try to force the UK government to bring forward the reopening dates. It seems like a David versus Goliath battle. Yeah.
Well, absolutely, Laddie. That's how The Guardian are describing it. We've got 2 big heavyweights in the hospitality sector, Sacha Lord, who looks after the nighttime economy in Manchester, and Hugh Osmond, one of the former boss of Pizza Express. And basically, they're not happy with the fact that Boris Johnson has waved the flag for non-essential retail, including lots of high street retailers just a stone's throw away from where I am in Oxford Circus, opening their shop floors to tens of thousands, perhaps hundreds of thousands of customers, but pubs and restaurants cannot open indoor dining at the very least until the 17th of May. They don't think the scientific data is strong enough. Going back to the first wave, the first lockdown we had just over a year ago now, I think lots of bosses at the time were pretty happy to close their doors because they knew, well, we had no idea then how long COVID would be with us. There was no vaccine. But now over 36.8 million adults here in Britain have had their first vaccine, and they do feel as if the hospitality sector in particular is being ostracised. Now the spokesperson for the government has hit back at these claims, saying that, you know, they are doing their best by opening outdoor dining, which has seen a boost over the past week or so. Footfall in high street shopping centres is up in some cases by about 300%, and they do understand the financial ramifications, which is why they said they've extended the business rates relief scheme. They are offering businesses grants of up to tens of thousands of pounds that they can claim back. But yes, this is an ongoing battle, and they hope, well, these hospitality bosses will hope that the judge will rule in their favour later this week. But as you did describe it, it is a David versus Goliath battle that the government are expecting to win.
Exactly. Well, It's understandable because the hospitality industry has been worse hit in the pandemic. But Rishi Sunak announced a top-level task force to explore the idea of a Bank of England digital currency. What are you hearing about this?
Yeah, this is another interesting story. It's part of a wide scheme of measures that the Chancellor Rishi Sunak is trying to implement to make or to retain the title of London being the financial centre. He started this with allowing the dual share class listing on the London Stock Exchange. There's also talk about these SPACs that we've seen pretty much flurry in New York come into London, and now potentially we could be talking about the e-pound, Laddie, which is going to be a digital currency potentially that will be distributed by the Bank of England. Not really a cryptocurrency, though, of course, you can compare it to that. We know the crypto market is pretty much unregulated. This will be regulated. And the Treasury, as well as the Bank of England, as you said, are going to be jointly putting forth a task force to look at and examine some of the benefits and some of the potential consequences of having this. But this is clearly where the world is heading. At the moment, Bahamas are the only country that do have a digital currency. I know that China are piloting a similar scheme around several cities within the region. But again, you know, technology is where it's all headed at. And Chancellor Rishi Sunak wants to make sure that London and the Square Mile are going to be front and centre if this does indeed kick off.
Yeah, we'll keep tracking to see how these CBDCs go. But how are the markets looking this intraday?
Well, I heard you talking in Frankfurt about the European Super League. Must I say, this is an absolutely massive story here in Britain, not only because it's been spearheaded by the big six Premier League clubs. We've actually had the Prime Minister Boris Johnson. He's been weighing in. He weighed in last night on Twitter. He's been speaking to the press today. This is dominating the British media, and not just in the sports pages, but of course this is a financial story. How is it affecting the financial markets? Well, everyone within the Square Mile is talking about football at the moment, and all eyes are on the New York Stock Exchange because, of course, that's where Manchester United, arguably Britain's most lucrative club, is being floated. Obviously, it's only floated by a small amount because the Glazer brothers, they own a big stake in Manchester United. And from what I heard before I went into the studio, though I'm sure the opening bell was already rang, Manchester United shares are up by about 4.8%. So even though this European Super League is being, and I've got to tell you, almost 99% widely criticised and condemned by football players, politicians, it's become a political story here in the UK. It does appear in the early stages that shareholders are liking the idea of this league. So, more domestically, though, the FTSE All-Share is up 0.28%. The FTSE 100 is up by 0.26%. And the FTSE 250 is up by 0.39%. In the currencies market, the British pound is up against the US dollar by 0.40%. Down, though, against the euro by 0.04%. And also down against the Japanese yen by 0.18%, Laddie.
All right, Juliana, thank you so much. Always great to talk to you. Enjoy the rest of your day.
Thank you.
Well, we'll bring you more stories from the African continent in a moment. Do stay with us. Welcome back. You're still watching Business Incorporated. Food prices in sub-Saharan Africa have increased to their highest levels in nearly a decade due to the coronavirus lockdowns and a decline in cereal production. Today we'll focus on the causes, the outlook for prices, and how it will affect consumers and companies. Matt Kindiger, an associate lead for Sub-Saharan Africa of Frontier Views, joins us now for this. Hello, Matt. Great to have you.
Hi. Thanks for having me on the program today.
Thank you for joining us. So, what has been driving the increase in inflation rate, which markets have been, and which markets have been most affected in Sub-Saharan Africa?
Yeah, sure. So there really have been four main drivers of higher inflation, especially food inflation across sub-Saharan Africa over the last year or so, especially the last few months. So we've seen currency depreciation last year that has really been pushing up imported prices. So we're seeing a pass-through of the effects of currency depreciation in key markets. We've also seen lingering disruptions from COVID-19 to the global trading system. So many African countries are seeing higher or increased costs of transporting goods to their country. So that's raising prices as well. And two other things, we have also seen a rebound in global commodity prices, especially agriculture and food commodities, which has driven up prices. And finally, some countries have endured a reduction in food supplies because of civil unrest in rural areas. So that includes countries like Nigeria and Ethiopia. So certainly multiple factors contributing to higher prices. And the countries that have been most affected include Nigeria, Ethiopia, both of which have seen inflation rates accelerate close to 20% over the last couple of months. And Zambia and Angola have also seen surges in inflation, again, close to 20%. These are multi-year highs, so quite significant increases over the last couple of months.
Yeah, quite significant. Well, which industries are most exposed to rising prices, and how are businesses coping with these trends?
Yeah, so not all businesses are affected equally by rising prices, especially food prices. So a lot of, the companies or the businesses and industries that are most directly affected include consumer-facing companies. So those are definitely the most exposed. Companies, especially, those selling lower-priced consumer goods are really struggling with keeping their prices down amid rising cost pressures. And also companies that are exposed to rising fuel prices and energy prices. So any heavy industry manufacturers or companies that use agriculture products as part of their input processes for production. So certainly a broad range of industries. In terms of how companies are trying to adapt to this environment, so there are a couple of things. It is really tough for businesses out there at the moment from a pricing perspective, but some companies are reviewing their pricing cycles, so they're changing their prices more frequently, having discussions with their local partners in terms of when they're raising prices. Others are looking to adapt their product portfolios, so considering introducing lower priced or lower cost products to give their customers more options of lower cost goods, lower priced goods. And finally, some companies are also considering localizing production where possible to protect them from volatile currencies. Others are also looking at currency hedging as a way of protecting them from the effects of imported price inflation as well.
Okay, well, looking ahead, what is the outlook for both food and core inflation across the region?
So very broadly, we expect both food and core inflation to remain relatively elevated over the course of 2021. COVID-19 related disruption to the global trading system the effects of the disruption caused by COVID-19 to the global trading system will linger for the next few months. So we are going to see high shipping costs, which will raise prices, will keep prices high for countries that rely on imports across sub-Saharan Africa. In terms of food price inflation, they will likely remain fairly high, elevated over the course of this year, and could accelerate in some markets because of production problems. However, we do expect inflationary pressures to gradually begin to ease towards the end of 2021 and the beginning of 2022. And there are a couple of reasons for this. One is more stable global energy prices, as well as less currency volatility in sub-Saharan Africa. So prices of imports are unlikely to rise as quickly next year as they did in 2020 and 2021.
All right, Matt, thank you so much. We'll keep tracking those numbers. Thank you so much for your time, and do enjoy the rest of your day.
Thanks very much. You too.
Thank you. An International Monetary Fund says it is more important now than ever that Ghana balances its developmental spending needs against the rate of debt accumulation by the country. Speaking on Ghana's growing debt situation during the April 2021 virtual spring meetings, the Director of African Department at the IMF, Bebe Amro Selassie, noted that Ghana needs to ensure that the country's debt sustainability doesn't get out of hand. Ghana's debt to GDP ratio crossed the dreaded 70% threshold back in September 2020 and is expected to hit 81.5% by the end of this year, according to projections by the IMF. And South Africa's health regulator has asked the government to lift the pause on administering Johnson & Johnson's COVID-19 vaccine, provided certain conditions are met. According to the SA Health Products Regulatory Authority, these conditions include, but are not limited to, strengthened screening, monitoring of participants who are at high risk of a blood clotting disorder. South Africa halted J&J vaccines after health agencies called for their suspension in the U.S. The J&J shot is a key element to South Africa's vaccination plan and has already been used to inoculate health workers with no reported adverse effects. The government has been slow to roll out its vaccination program, and only 292,000 healthcare workers had been inoculated with the J&J doses as of April the 17th. And Guinea has received a shipment of 300,000 Sinovac COVID-19 vaccines purchased from China and is also set to receive a donation of 200,000 Sinopharm shots. Guinea is reporting 93 new coronavirus infections on average each day, 59% of this peak in March. There have been 21,460 infections and 138 coronavirus-related deaths reported in the country since the pandemic began. The West African country has administered at least 109,000 doses of COVID vaccine so far. The World Health Organization will decide late this month or in May on emergency use listings for COVID-19 vaccines from Sinopharm and Sinovac following an extended review. That's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.